Well, good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening of Thursday, the 22nd of May, 2025. And the time, let me get my clock turned on my wrist right, 5:50 p.m. Central Time. So what do we do? Well, tomorrow, it's like an evening update. You've got in front of you the long Memorial Day holiday. Remember, you have abbreviated trading hours in futures, and you certainly have nothing open in the stock market come Monday. So keep your eye on that. We've sent out the trading hours to all of our subscribers and clients already, so they should have received that. As for the market today, well, at 6 in the morning Central Time, I was watching the vote being taken in the House of Representatives. I'd already been up since 3, so for me it was 3 hours in, and it passed. And at least it's out of the House. You don't really expect this version to be the version that the Senate finally approves. How far off? That's the big question. What can the Senate live with? Do they tack things on? Do they take things down? That's what we have to wait and see. That could take from here until the end of June. Then it probably goes back to the House late June. They'll go through another week or two of arguing it, and then they'll get committees with the Senate together, and they'll find a deal. And then sometime, I hope by August, this whole thing is done. The important thing is it's behind you now. And the Senate won't take it up right now. Everybody's going on vacation. They're leaving. They're going for their Memorial Day, and they'll probably take extra time off, and then they'll get back and start having to address the different things. The president has his hands full. We have a meeting with Iran over the weekend where Mr. Witkoff is going to meet our envoy and see what the Iranians are saying. Already the Iranians today are coming out and saying, we are not giving up uranium enrichment. Great way to go into the meeting, and we will see how that settles with everything. It's now a question of what do we do about interest rates? Does the economy slow down? Where are we with everything? And somewhere along the line here, the market's got to start focusing on something else. The market seems to have gotten, for the moment, somewhat comfortable with 10-year notes sitting up here at 4.5+%. So that's interesting. I want to remind you all that we have our Memorial Day sale right now. It's 40% off any of my 1-year research plans. You go to iraepstein.com research, that's one way. Any of my courses, the charting course is normally $600. And on the courses, you can buy them now, give them as a gift later, let us know who you're giving them to, and they'll be the recipient of it. So this is great for Christmas, graduation, whichever way. But when you buy the research, we put it in whoever's name right away, and it starts when it's bought. So 1-year deal, if you just think about it, if you're watching futures video, that's basically less than $8 a month for a minimum, generally, of 20 videos a month. I said minimum because I do special reports that are included in that as well. But the best thing for just futures is the 1-year complete package with the combo. And not the combo, but the Spider ETF, because what you get then is everything. And if you trade Spider's ETFs, you want to know what futures are doing. So many of the ETFs are based on that. Okay, there'll be an icon at the top here. There'll also be a circle here if you watch on YouTube to take advantage. It's done Memorial Day, so you want to do it. It won't be there come Tuesday, all right? So take advantage of what you can. So let's go, if we could, to the marketplace and see what we have tomorrow in news. You're going to have the April new home sales data. That's the only piece of big economic news I see coming out. And that comes out at 9, and they're looking for a market down about 4% on the month for that. So that's where you're at with that. Today was a day where the market consolidated, but you're slipping back a little bit in early evening trade. I think you see that right across the board here as all the stock indices are trying to slip back. The gold market stayed relatively calm against the 3,300 level. Energies are weaker even tonight as OPEC is saying they want to go and increase production in July now. Remember, they had agreed to go through June. Now they're talking continuing that. When you look at the bonds and notes in the marketplace, you're losing back a little bit of yield. And in Bitcoin, here we are. You went up today to $112,000. I am thrilled because I have clients on my Spider ETF service, and they are along the IBIT, the Bitcoin Trust. Now, if they follow the recommendation, I never know if they do or don't. When you look at the 18-week moving average of closes in the S&P, you're over it. So on a weekly basis, the market is still doing just fine as the bias is up. When you come to the daily bar chart, you can see how the market was coming up, and it's suddenly sort of leveling off. I think that's the right word. This blue line at 62.36, that is your contract high. The reality is the market hasn't given up much in this whole break. Certainly not a big break from the 6,200 level when you're sitting here at 58.50, 400 points. Just not that big of a break if you think about it. When we look at why, because the market's fallen back into the 200-day average in gray, the 100-day average in green, and right below it the 18. Are we trending? Well, you have the bias up, but you're not trending. You have a higher high and lower low, and the market's not attacking the upper Bollinger Band, so that's not doing anything. I call this neutral, and momentum was just lost. You lost your bullish embedded reading. When you lose that, then the odds favor the market's going to come down, and it's already into the objectives of those moving averages. When you take a look at the NASDAQ, you're now flirting tonight with losing the embedded reading, but it hasn't been lost. So the pros are probably nibbling here, but if it gets lost, they'll probably come out because then the market might slip back into the 2070, 2060 level. The combination of the 18-day average in red and in green, the 100-day moving average. In the Russell, this has been, to me, the most bearish of the indices. The trend is down on the swing line. The market for the moment, I want to use that carefully, is at 2048 roughly, and that's under the 18-day average, so momentum down, bias down, and you can see your momentum right through there. So it either fights a battle here, or if it gives up, maybe you go to that 1954 zone. In the DAX, which is now going to load up for you, the market is fighting a battle at the upper Bollinger Band. If it loses the embedded reading tomorrow, then the odds favor, before you go for a new high, that it too wants to come back, and it could go to the 4270 level to regroup. Wouldn't surprise me. In the bonds and notes, well, you've now seen the tax bill. This is what everybody was nervous about. So it was sort of sell the rumor and buy the fact. I don't know. It's acting like that a little bit. I'm not saying it's bullish. I wouldn't be surprised if you want to fight a little bit more at the green, the 100-day average, and you're certainly not embedded. You could embed. You can't count today. So both numbers tonight being under 20 don't mean a lot, but both were under 20 on the close of Thursday. Friday, we don't know. They were certainly under that on Wednesday, and under that the day before. So what you have is a bearish embedded reading. It's lost if you get a close over 21, which would then say you're probably going back to at least the 100-day average, if not the 18. So a bounce could be in store here, and you're doing the same type of thing right now in the 2-year note, identical. When we look at the dollar index, it got hit yesterday, giving you a small bounce today to the 18-day average. The bigger trend is down, but the market very close to being oversold. I'd like to see the market get away from that. In the eurocurrency, the market is trying its darn best now to be bullish against the 18-day average of closes. It's only got a 65 reading. It's not overbought. There's room to run. We'll see if the market does it. I wouldn't want to see this past low that I'm pointing to. What was that now, 4 days ago? If it's 4 sessions ago is probably the way to say it, being taken out. In the British pound, I thought you'd run into a buzzsaw at the upper Bollinger Band as you're overbought, and you have. You're not really adding to anything right here. Bitcoin, still with that embedded reading. Today I was hearing people calling out 140, 150. For the next move. I don't know. I'm going to do a price count on it. It'll give me a better idea. And when I look at the Brent crude, notice how you made your challenge of the upper band and bang, 48 hours later, you're back down to the 18-day average and you have an overbought market, but it's refusing so far to stay under that 18-day average. Same thing happening in July WTI. Now in the gasoline market, we have fallen back into the 18-day average support. Overbought market that I think needs correction. We're at a 4-year low in gasoline prices for Memorial Day. That's very good for the American pocketbook. Last but not least, I've got the bearish setup in natural gas. I think you'll see resistance towards that 18-day average. But if you get over that 380, 350, it would say the market's just not there. So I think you're going to see the pros pretty aggressive on taking on that 380 and a half level to see if the market stops them out or not. Wouldn't surprise me. Again, the Memorial Day sale, take advantage of it. It's right here, iraepstein.com, either under charting courses or research. You need no coupon. The pricing is there. It will change Memorial Day. You have yourself a great evening. I'll catch up with you all first thing in the morning. Take care.